Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone had a relaxing weekend, a little time away from the screens. Back to business. Time to make the donuts, and we're going to take a look at what we've got coming up this week. All right. So first of all, you know how we like to start off the week. We're going to go ahead and jump into the economic calendar. Now, there's a couple places you can do this time of year. Remember, it's about scheduled, emphasis on scheduled, high impact, high volatility events that we need to be aware of. And obviously, we're in earnings season. I'll talk about what we're going to do there in a moment. But check out Monday's calendar. We know we've got the Empire State Manufacturing Index in the rearview mirror, meaning this data has already come out. You take a look at the data around 8:30. Actually, you can see a pretty tall candle triggering with that event. For the most part, we're looking at a fairly bullish morning already, and Empire just seemed to send that higher with that data. FOMC member Harker is speaking at 10:30. Remember, anytime we have FOMC chucklehead speaking, we're going to have a little bit of insight into monetary policy. We're going to have a little bit more insight into, does the Federal Reserve hold for the remainder of 2023, which does seem to be the probability, and then when might they cut? Right now, cuts are expected at the July meeting, which might as well be in the year 3000. Right, as far as the stock market is concerned. So we want to see that come in, and any hint that that is at least something that's percolating in the collective mind of the FOMC will be reason for the equity markets to rally, as will cooler inflation, as will weaker jobs. Remember, we're still in a good news is bad news environment. All right, so in terms of the overall week, some retail sales numbers. Certainly not anything to ignore, but not as important as FOMC speak or data on jobs or inflation. So the big event this week will be FOMC, the Fed Poobah, right? We've got that on Thursday at noon. Now, from an alternative standpoint, and I'm not a big fan of earnings, right? These are high impact events that we have to respect, but we don't have to trade, gang. We don't have to guess on which way, for example, Bank of America is going to trigger the financials, and then as the dominoes fall, the Dow and the S&P, and even the Russell. But we do need to respect that this is tail wags the dog season, meaning a single stock that's relatively high weighted, say think top 10, top 11 name, can move the overall sector, which can in turn move the overall index. Bank of America is the top 3 weighted stock in the XLF. XLF's the number 1 weighted sector in the Dow. You can see how the dominoes could and are likely to fall. So keep an eye on that. That's the secondary calendar that we've got to keep an eye on during earnings. And if you haven't already, I don't know the folks over here any longer, although a buddy from way back when started this service. Estimize is where, and you can do this for free. They have a free version where I can choose which stocks I'm going to follow. I don't need to know about all the earnings this week. In fact, all the earnings aren't even that relevant. What are high concentration weighted stocks in the high concentration weighted sectors? Follow those. That's where the impact is most likely to be. All right, so where are we in terms of the indices? And as always, gang, phone lines are open for your request. Go ahead and type in your question. And good morning, good morning. Thank you, thank you. All right, so let's take a look at where we are. We had the NASDAQ dip into the daily price movement range on Friday after what was a pretty significant sell-off, and it's stabilizing above the previous session close. These are some important sentiment levels that we have to keep an eye on. After the NAS, I'm going to take a look at the Dow. So I go from tech emphasis to financials emphasis. The Dow is up, right? The Dow is up quite handily. This is not as strong, relatively speaking, as the NASDAQ is, because remember, XLF is in a downtrend. So if the Dow is up, there's one of 2 sectors that have got to be in play here. One is the XLF financials. 2 is healthcare, and they're both up today. This is going to disproportionately benefit the Dow and then secondarily the S&P. So keep that in mind on the open. All right. So where else can we look for some clarity in terms of the Dow and the S&P? Energy. Look, when I look at crude oil futures, when I look at the XLE, XOP, and the OIH, no doubt this is one of the best, most clear trajectories in all our different markets, energies, treasuries. Like treasuries are in a really nice downtrend, but I would be concerned about a short squeeze if the FOMC abruptly changes monetary policy, because they never do that, right? So be careful with committing to aggressive shorts in treasuries, because hey, we know Powell and company can shift on a dime. That would send yields lower and ZB futures TLT sharply higher. However, crude oil is on a fairly steady trajectory, and the central bank around crude, which is OPEC, controlling their currency, crude oil, they've been pretty much in lockstep with the way price action's moving. We want to keep an eye on crude. Definitely want to be bulls in this corner of the markets, right? Now, remember, we're looking at currencies, we're looking at treasuries, we're looking at energies, we're looking at indices, we're looking at metals, right? So be specific to which one of those 5 places you're looking, right? There is no such thing as the markets unless we're seeing everything rallying or everything selling off. We really have to be focusing on where the relative performance is. And right now, it's hard to bet against what's happening in energy and energy stocks. And if you want to throw one other sector in the mix, throw those natural gas stocks. Maybe not Natty itself, but throw those natural gas stocks into the mix. October's been a big month for Natty, though. Take a look at the daily time frame of Natty here. Natty is finally starting to do battle with the 200 exponential moving average. It's finally turning into an uptrend. So this is looking better and better for buy the dip. But the corner of natural gas that's been, relatively speaking, stronger have been the stocks around natural gas, right? So again, relative performance, but we love when the stocks and the commodity are moving in the same direction. All right. So let's see, what else do we have here before we get to the questions? I realize maybe the caffeine hasn't kicked in yet on a Monday morning. All right. So let's see. Thank you, D. Volton, as always. Thank you so much. Yeah, definitely do smash that like button. If this is a needle moving morning for you in terms of starting off with charts and coffee, absolutely. I appreciate the time. I appreciate the comments and questions. And yeah, for sure, smash that like button. Good morning from SoCal. Hey there, Anthony. Good morning. Good morning. Let's see. Trader Momo says, yeah, let's see if we can get some follow through. You know, what's been plaguing most trades, right? I put a pretty frank and straight up video about losses at the Simpler Trading YouTube channel on Friday. I want to normalize losses. Let's understand that everybody loses. Not everyone loses well. The better we can get at losing, when losing becomes a superpower, when your risk management muscle is like Schwarzenegger, you're on the right track. And how do we do that? We do that by talking about losses. We talk about position sizing. We talk about validity of a trade. And we talk about where stop losses should be placed. Not about adding and defending and all the things that take us down the river of denial. Denial being the first step of the 5 that I talked about in the video. If you haven't checked the video out and you want to know what those 5 steps are that you want to, what are the stages that we all go through in a losing trade, and how quickly can you identify that you're going down the rabbit hole? I go into a lot of detail on that, as well as my favorite book in that Friday video. You can check it out at the YouTube channel, Simpler Trading YouTube channel. So where are we this morning? Above right now, key sentiment levels. But in terms of the actual structure, right? Think about context. We talk a lot about this in the Sector Secrets Mastery. We don't choose our favorite club out of the bag and just start swinging away at that little white ball, do we? Right? When we're playing golf, we're looking at the distance to the pin, wind, the lie, the loft, all that stuff, right? I don't just keep playing my favorite club. Ultimately, I think a lot of traders slip into that. Oh, my brand new indicator, brand new strategy, favorite indicator. Bottom line is context is everything. So if I have a trend in the S&P, there's going to be a little bit more bullishness, more context for buy the dip. Why is the S&P in an uptrend? Our relative outperformer is the Dow. Remember, the Dow is going to be either the influence on the S&P or the NASDAQ is. If the S&P is an uptrend, we know the Dow is the influence. What about the Russell? If the Dow is up, my favorite Russell futures or ETF, Dow futures or ETF, my favorite days for both those are when they're moving together. Why the cohesion? Because of banks, regional banks, the Russell, big banks for the Dow. So this is actually looking like a really good morning, meaning bullish. I don't mean good as in bullish. I mean bullish clarity. Hey, if it was bearish clarity, that'd be fine too. That'd be great. We're starting off with some really good clarity to begin the morning, and we know why. KRE, XLF, we'll keep an eye on those. All right, let's jump into our questions. First one of the morning. Thank you, Wilkin. Should we feel optimistic today, given that the Russell is green and playing nice? So, I don't know if this is what's the undercurrent of the question, Wilkin, but let's just tackle one thing first. First of all, yes, I'm optimistically bullish, but it's not a matter of bullish being good and bearish being bad. Clarity is great, right? Clarity is great. Now, there's so many things that get repeated in the markets. Here, we kill dogma around here. This isn't about, I heard that XYZ. The Russell is not a leader. No, not in any way. And I know that's not what you asked, but anyone thinking, wow, the Russell leads, it absolutely does not. What it does is it works in unison with regional banks, right? Look at the connective threads, and rather than generalizations, right, and correlations, which are just going to lead you down sort of a very dark pit of this is supposed to happen until it doesn't, right? KRE is going to move very often with XLF, which is why the best trading, especially for day trading mornings for me, when I'm looking at the Russell, are when it's moving with the Dow, right? And that means KRE is moving higher, XLF is moving higher. That's the connective thread. So Russell doesn't lead anything. Russell works with the regional banks. Dow works with the big banks. When all four of those things are moving together, that's fantastic. And then that's going to assist, not be the sole reason, but that's going to assist the S&P. The number 2 weighted sector in the S&P are financials. So unless tech is having a really bad day, XLK, NASDAQ, that should help the S&P. And we can see here, of course, it's helping out. But notice the S&P's trend is not as good as the Dow's because the Dow has more weighting in banks than the S&P does. So think of it this way. Think about 10th grade science class. And I know I didn't like dissecting that poor frog either. But, think of it as X-ray vision, if you will. What is inside the index and what's inside the sector? And once we understand let's think about it as a motor. Once we understand what the cylinders are that are driving that motor, we have a far better idea of why that motor could outperform. So think of the cylinders within the Dow as tech, but primarily financials, then tech, healthcare, and energy, right? The more of those cylinders that are firing, the better chance that engine has of moving. So yeah, Russell's having a great day, but please don't fall into the trap of, I heard it leads. No, but it's got a great hand and glove fit with the Dow, right? Okay, next up. Thank you for the question, Wilkin. Great way to start the morning. I appreciate that. Huge breakthrough, talking about losses, ordered. Yeah, my favorite book. All right, I'll tell y'all right now what I learned losing $1 million. My absolute favorite trading book. I talk about the takeaways in the video from Friday. I'm glad you got it. Awesome. With the strong trending month of July, approximately what percentage of my overall profits were from swing trades? Oh gosh, GJ, I run all that in TradesViz. Off the top of my head, I mean, overnight positions were far better in July than they were in August and September. And I didn't even really swing trade, I think, much at all in August. I think we had 3 maybe in August, maybe 2. September, we did not have any swings at all. We finally reintroduced the overnight swings in October because of that lack of follow through and that macroeconomic cloud that kept follow through so tricky. I don't remember off the top of my head, and I don't want to give you an incorrect number. But here's the thing, GJ, let's go upstream to that question. Until we get another month like July, I'll be frank, I don't even want to calibrate to those expectations, right? If you notice, I seldom talk about July when we talk about returns of the last few months because July went straight up. And if I calibrate my expectations to July through August, through September, through October, I'm calibrating for the absolute wrong thing, right? So, did I have swings in July? Yes. Were we much more active in swings in July? Yes. And like everything else, a trend makes us all look like geniuses. As one of my mentors told me, and boy, it stung the first time he said it. He said, "Kiddo," which I still find crazy patronizing, but he did say, "Kiddo, don't confuse an uptrend for brains." And I try to keep that in mind when I have any kind of strong trend that's carrying a trade that I have on. So I don't know, my friend, but it was going to be far better because of the uptrend. All right, next up, Matcha. Hello. If I have any advices, can I tell me what is the most important thing for trading? Wow, that's a big question. So I would tell you your most important capital is not money, it is confidence, right? We could all go create another grub stake. We could all go back, save money for trading. So I would say two most important things. Have confidence, not only in yourself, but in the process that you're using. So that presumes you have a trading process for day trading. You have a trading process for swing trading. And this is where we have 4, 5, 6 criteria that when met, only then do we put on a trade. We also have a criteria for position sizing and risk management. Believe it or not, gang, some traders don't have all three. Some traders just have one. Give me a reason to get in, I'll worry about losses later, right? And then the second most important thing, Matcha, is don't start this game underfunded, right? I would no sooner recommend to a friend to start a business with not enough capital, right? But trading is a business. It really is. And if we are going to start a ice cream shop, will we start off our ice cream shop short funded? Not in a million years, right? So then what we want to do is we want to ask ourselves, are we starting our trading business underfunded? I am not a big fan of this small account mindset of let's take a very tiny amount of money and try to grow it to a lot. I think that's the same mentality someone would have starting a business. So those are my two recommendations. Have a process, and for sure, right? For sure, do not start underfunded. Save a little bit more money. Take advantage of free content like Charts and Coffee, like the Top Tier Outlook show we do on Sundays, and all the other free content here at Simpler Trading YouTube and my YouTube as well at Raghee Horner, and keep learning and keep growing that account. Those are my two most, I would recommend that as the foundation for anything going forward. All right. Next up is, what are the indicators I use? There's quite a few on this screen. You don't have to use them all, but probably the most important one is my multi-trend at the bottom, which is a combination of studying 4 exponential moving averages and the way that they relate to one another. And I'll tell you what they are right now. It's the 8, 13, 21, and 34 exponential moving averages. And the way they relate to one another is what plots the top and bottom row of those colors. That is the structure that I'm dealing with, bullish momentum or bullish trend. And then that's going to dictate what indicators I use. That's going to dictate what strategy I use. In other words, context, right? Context is everything. For us in trading, context is the structure of the market, right? Trending, non-trending, choppy bearish, choppy bullish, etc. All right. So thank you, gang. All right. As always, we are here Monday through Friday for Charts and Coffee Live. Bring your questions, bring your symbols. We're here from 9 to 9:20 each morning, and then I'm going to hop into the Sector Secrets Mastery Room. If you want to check out what we're doing in the Mastery, learn more about how I take these ideas and apply them to the market live every morning, sharing my trades, head on over to sectorsecrets.com, and I'll see you tomorrow. Same time, same station, gang. Be good to each other.